Good morning, everybody.
Good morning, Bruce.
Good morning, Nadeem. Good morning, Suraj. Good morning, myself. Okay. Welcome, everybody, to Tuesday's version of our 9 a.m. spot series. We have some great guests today. We're going to have a great discussion, like always. And so I want to introduce my guests from Schwartz Levitsky Feldman, chartered professional accountants, here to discuss some pretty updated stuff on auditing and tax and assurance and accounting. And to start, Nadeem, well, can you introduce yourself and say who you are, and we'll start with that. And who are you?
Sure. Yeah. Thank you. I would like to take this opportunity, Bruce, to arrange this, to host this, to invite us for this, I think, very timely discussion. My name is Nadeem Jilani. I'm an assurance and advisory partner at Schwartz Levitsky Feldman. And today, as Bruce said, we'll be touching base on the auditing and assurance impact, and then the impact of COVID-19 on the business community.
Thank you. Suraj? Did we lose him?
Yeah, I think Suraj is.
It's okay.
All right.
We'll have to have some technical difficulties. Suraj, just give it a moment. Okay, okay. So what we'll do, we'll just keep, oh, he's back. Okay, Suraj, you can take yourself off mute, yeah, mute.
Sorry about that, guys.
No problem. It's part of the landscape, you know?
It's part of the new reality, exactly.
It's part of the new reality. So Suraj, tell us who you are, and tell us who you are.
Hi. Yep, so Suraj Patel. I've been with Schwartz Levitsky Feldman now for coming up on 2 years. And prior to that, I was working with a national accounting firm for 13 years. Background is tax planning, tax consulting. And yeah, it's great to be on today with Bruce and my colleague Nadeem, obviously from SLF as well. We have a lot of good points here to share with you guys all today.
Okay, perfect. Okay, so we're gonna start discussion. And by the way, if people would like to go on to video and show themselves, absolutely, you're welcome to. We've opened it up that people can show themselves. So first I want to start by just, there's a lot going on, a lot of changes going on, and a lot of changes in the landscape with respect to assurance and auditing. So Nadeem, can you start by just telling us, like, from your insights, where's this thing going?
Definitely. Thank you. Now I see a familiar face here. Mr. McDonald is here. Good morning, Joe.
Hi, Joe.
All right. So a few years back, my wife and I, we watched a movie, Contagion. And we never thought that we will live through our era, something like that, right? Matt Damon playing a father, and then the virus transmitting and becoming a pandemic and spreading throughout the world. And I couldn't even envisage that if something like this happened, how would we live through that? But here we are. We are witnessing something like that. And then the two very prominent names in the news area, which is BBC and CNN, we will always, as Canadian living next to the south of America, we'll always refer to CNN to get our share of the feed and what's the current administration is doing, affecting the Canadian businesses, like NAFTA and all the other stuff, subsidies on the thing. And then that channel all of a sudden turned into a COVID-19 broadcast 24 hours a day, and give a new name or new celebrities like Sanjay Gupta, who was providing us the updates about the uncertainties. And that's where we are. Everything is uncertain. Everything is, we don't know, because we are learning on the go. And then so the one thing led to another, the stoppage of businesses and the pandemic, the curfews, and there are certain countries which are imposing the fines, and we have seen the fines in our own city. at the beaches, if you are sitting at the anything to do with owned by the city, it was prohibited. It was all impacting at an unprecedented speed to the global economy. And the World Bank report says that in 2020, the global economy will be contracted more than 5%, right? And so then the GDP growth drop from the South Asia, which will be like 3%, to the as high as 7% in the Latin America. And the things like the cyber attacks are increasing. The fictitious websites are coming, which are like attack on the Twitter. Those scammers are coming. So in all of this uncertain world which we are living, we needed to be more cautious. And before anybody just think why I'm reiterating all the
We're having some technical difficulties.
how related to the business world. So the business world and the audit profession. The audit profession is about when you start an audit, you anticipate, you develop expectations, right? And how can you develop expectation when the things are on the move, right? Like this, even the vaccine. I was just like reading in the recently Globe an article. They're saying that they're finding it. FDA is finding it hard to approve the vaccine. Vaccines. I'm not a medical person, but they say the vaccine, before they just like approve it, it has to be useful for everybody. Now the COVID-19, if with my limited knowledge, it's evolving, it's changing. So they're saying some people are asymptomatic and some people are not changing. And so the vaccine is for a limited number of people. So this kind of uncertain word that we need as an auditor before you plan your audit, it's no longer the old-fashioned way or just say, okay, what happened? The norm until in January this year was that, yeah, things were the same. Like, yes, there will be another influenza thing, until World Health Organization declared this a pandemic. Now things changed from that point onward. So everybody got affected. The social and work life got affected. So for an auditing profession, as an auditor, we have to think on the spot that how do I plan and execute my audit? I determine the risk, but what type of the sufficient and timely audit procedure I can devise to get it when I'm unable to even attend the inventory counts, right? And that could be if it's a significant item on somebody's balance sheet in a manufacturing company. So what kind of opinion I can give? So all of these things need to be considered before even we could just do any or plan any auditing things. And then there's certain intricacies like looking at the gap. Like I'm making it now more technical. That you would have to consider that the financial statement reporting, right? On that basis, that you will have, you need to disclose the subsequent events. Now, the subsequent event for the companies which have the year ends prior to the declaration of this COVID-19 as a pandemic would be different than the year end after that. Now, let me make it clear why. What is the little difference is because the definition of subsequent event, according to our handbook, would be if the condition existed on the reporting date, right? So now, if the year end is December, so the condition did not exist. However, the auditor and then the owner has to assess the impact of COVID-19. So some sort of disclosure is required. Now, on the other side of the line, if the year end is after, now the impact is more widespread, because now we are talking about the measurement and the impairment of the assets, which will require a total different assessment, where you have to, and very careful assessment, because think about it, for the impairment at a point in time where we will take about it based on the projected and forecast, which has the hypothesis and assumptions. Now, we don't even know if there's a second wave or a third wave and what's going to happen. Things are changing on the go, right? So for those reasons, it's far more, it has become, our job has become far more complicated under the circumstances. So that care has to be taken. And not to mention, the financial reporting is one part, and then the financial statement itself, how to obtain the audit. Yeah, we can use luckily the latest technologies. We can have a video call, video conferencing, but also looking at the internal controls, which sometimes, like most of the time, auditors rely on them. But think about it now, because with all these layoffs, have the segregation of duties changed, right? So if what fraud impact is going to bring it, right? So that again, making our job that much difficult. So there are less people there, so when less people are performing multiple jobs, which they were not, they were not in charge of. So now we are going back, and will all these parties, if we are not, what about the availability of the evidence for like electronically PDF? We get it, but can you trust it? How much can you trust it? How can you tell that this hasn't been, modified or changed? But as an auditor, so all of these things need a very careful assessment before even we can do our job effectively under the current circumstances. And the other thing which also affect the financial reporting would be is that the companies are having the cash flow problems. Now they are unable to service their debts, right? So for debt restructuring, that will have a huge implications, because if you can't do that and you are breaching your covenants, then the classification of the things will change on your balance sheet, right? From the long term, you'll have to classify them as a current for that reason. And the most of all is the going concern, because the supply chain has been disrupted. That the borders, the transportation across the countries and the shipments, if that is interrupted, so the raw material and then the goods are not being moved. So if a company, every time I go into the Walmart and Home Depot, there's certain sections, especially the seasonal section, I didn't see anything new. The shelves were just empty. They were just trying to get rid of it. I never asked that whether you are not getting the supply or you are trying to clear the back inventory, right? So the things like these, for a business, for a going concern, has to be assessed by the management, right? And it is very vital for a year end, which happened after COVID-19, because management has to be far more diligent and very careful in providing the auditors that how are they coming up with their the forecast and the budget for the impairment, for the valuation and the measurement of various financial statement items. And I was also reading certain facts about the tax thing, and they said that Revenue Canada's thing, so 51% of Revenue Canada's tax came from the personal taxes, and only 15% came from the federal, for the corporations. So it got me thinking that somebody has to pay, right? Now, all these subsidies are coming, which Suraj is gonna now, I'm just gonna hand over to Suraj, but before I hand over, I just want to make this point that government cannot just keep printing the money, right? At the moment, at the first time in Canadian history, our debt, crossed $1 trillion, right? And then the growth rate dropped in the UK. I was reading, right? So these economic indicators are in such a haywire situation. We are not even able to predict anything. And then, like I said, I'll reiterate again that the audit is always uncertainties. We have to address those. And unfortunately, we don't have the answers currently. And that is the difficult part, which is making this our job even more difficult. So I was going back to the tax thing. So the 15% is only collected from the corporations. So now got me thinking that what will happen after all these subsidies are handed out? Then do I see on the horizon the increased rate of HST, or all the federal or the corporation tax rates, which were promised that they will reduce by 0.5% every year, now they will start to go back in the different directions? Now, I don't know, because that's not my area, and that for that discussion, I will hand over to my colleague Suraj to take over, and who had a lot more tax insight than I could even shed a light.
Suraj?
Thanks, Bruce. Thanks, Nadeem. I mean, Nadeem, to your sentiment, I know, like, even just going into a Walmart to pick up some pancake mix and Jemima syrup, it was at times the toughest thing to find. It's crazy. And my kids are all about Saturday pancakes, and we couldn't do it. So, we had to improvise, but that's what this time is. It's about improvising and adapting to the new normal, I think, that we're going to have now, right? And so when it came to the tax and, the government aid that's out there, obviously the government in response was looking to get cash flow going, right? So, or keep it going. That's the way to keep the economy kind of going, to make sure there wasn't a immediate standstill, right? So, there's various programs that are out there. I'm sure a lot of you know about them, like the Canada Emergency Wage Subsidy, the Canada Emergency Response Benefit, the Canada Emergency Business Account, and then the Commercial Rent Assistance Program, the SECRA was the popular acronym for that one. All these things are obviously different programs aimed at a lot of businesses and individuals that need that cash flow to keep afloat from going under, right? So the big thing is, this is the largest amount of social assistance that the government has ever put forth for its population. And with that, you can see throughout the last few months that they've made introductions to measures, and there has been changes to measures that have been introduced. So it's been a constantly change to the various programs as well, and hands off to the government for putting the program out there in the first instance, and then also taking stakeholders' inputs, thinking over them, mulling over them, and then implementing changes based on what's actually going out there. Just last week, for example, the Canada Emergency Wage Subsidy, they announced, that they're going to extend it now all the way to December this year, and they're actually doing some revisions for how the wage subsidy program will work going forward, starting with the claim for July. So, it's a time where if you need to be involved, if you need the cash to stay afloat and whatnot, there are definitely various programs out there. And we need to see what's available to us and to take advantage of those programs, because this is the time a lot of businesses need that assistance. And rightfully so, we're there to help everyone out, get through this storm, let's call it. But I guess the next big question that I always get is, with all these quote handouts that are happening to keep businesses alive and individuals from defaulting on rents or their personal mortgage or whatever the case is. What's in line for taxes going forward? And so Nadeem kind of highlighted it. There's three things in my mind that the government's going to have to do to kind of recover from this, because we are at all-time high in terms of debt load. The first thing, I think Nadeem hit it, was a possible increase, I think, and based on discussions that I've had with various other tax colleagues, is I think HST increase is a very, very likely scenario. I think we used to be at a combined HST rate in Ontario at 15%. We're now at 13. So will it go up to 15% again? I don't know if that's the rate that it'll go up to, but it's likely that there would be some kind of an HST rate increase to help fund all of this. A second area that I think that is obviously going to be a likely area is auditing aggressively, the various claims that have been made under these various assistance programs. So a lot of times when I talk to clients that need help with applying for these programs, I make it clear to them that make sure you need this amount. You're obviously attesting to a lot of stuff here. Your revenue decreases, that you've paid these wages, and that those are the big two things that you're saying, that I have incurred these things, and so please provide me the assistance. So if you can weather the storm and you have the bank to weather the storm, I always recommend clients to weather the storm as much as possible. But to those clients that do need it, I do suggest go out and apply for the assistance. And the third area, I think, is your tax rates. I think right now we're at a pretty historic high in terms of combined personal tax rates in Ontario, at about 53.5%. If you're making income over $220,000, it's a very high rate of tax. I think everyone's going to always ask, can it go higher? And the question is, yeah, I think in these circumstances, it may have to go higher. But what are the avenues that the government can try to get more tax dollars? When you think about how small company shares and dividends that you draw from those small company shares have been taxed over the past so many years, and how capital gains have been taxed the past so many years, there's been a disparity now, right? So at the highest marginal rates in Ontario, capital gains are taxed at about 26 2/3%. And when you're talking about dividends from a small business corporation earning active business income, the rates are approximately 47.4%. So there's this big disparity now between capital gains rates at 26 2/3 and ineligible dividends at 47.4%. I think that's the widest spread that we've had between those two types of incomes in a long time. So there's been thought about this in past legislation. It's just never come into force. But a good area that the government could probably look into increasing tax revenues is increasing the capital gains inclusion rate. Currently, it's at 50% of the capital gain. They may increase it from there to get it to a more comparable level to taxation of ineligible dividends.
Suraj,
So,
what do you think about, because someone had a question, the capital gain tax on residential homes? You think there could be something there as a means? Claire had a question about that.
I know there's, it's funny that you did that. I was reading some stuff about, just residential and how housing in Toronto has still been going up. I mean, I think I read an article in Blog TO that mentions that housing in GTA has gone up $100,000 from June over June on average. And, the surrounding GTA areas have experienced just as much, if not more, in terms of average home prices going up. So that's definitely one of the things that are on the minds of a lot of Canadians, that, for those that are looking for a house, it's hard for them because the prices keep going up. And then those that have a house, they don't want the other side where anything happens to that sort of the drop. So there's conflict there. Having a capital gains on a house, I don't know if that's something that the government will look to right away. the article that I read mentioned something about a CMHC survey or research to see if it's a viable thing to do. I know in that very same article, I read that the government has said previously that they don't intend to follow through with that kind of a taxation. But again, that was also a few years ago, right? And that was also a study that was a few years ago. If you look to the US, I know the US does have capital gains on residential homes in excess of a certain threshold of a capital gain. So there could be that hybrid measure as well that could be introduced down the road. But is that something that I think is likely? Personally, I don't think that's something that's likely in the case, but I know that they are looking into avenues of raising tax revenue. Could this be one of them? Perhaps.
Yeah, if I can add some things for here, that being the tax model, in my again, like I said, I do it very. The tax model between the U.S. and Canada is, I think, in my opinion, quite different, right? And then our model is more of a British, being a British colony. So in the British rules, excuse me, when I was studying my CA in England, so that's where the capital gains thing and the principal private resident is tax free. Those are the basic things for the society, right? So for CRA, excuse me, for CRA to start assessing or even consider it, I would think that there will be a very fundamental change, because for years, like for in my case, that we never get any deductions that were like mortgage interest or something else. And then for CRA to come and say, hey, when you sell your house, I want the gain because now the tax regime requires it. And I didn't get a benefit of any deduction, where in US, I think, Suraj, correct me if I'm wrong, that there is some mortgage deduction and certain expenses related to your principal resident you can deduct, right?
Right. So my understanding is that there is more
you take the benefit on going
that.
as you're going, right?
Exactly. So there's more of that available in the US, and that's why they have, the capital gains in the US on residences over a certain threshold. I don't know the exact threshold, but you're right. I think I do understand that there is, the availability to take a deduction for your mortgage interest paid on your house throughout the years that you own them as well.
Right.
The exact calculation and how that's done, obviously I'm not 100% sure, but that's why it works in the US system, I guess, or that's how it works in the US system. So if there was something like that coming on this side of the border, I would envision that all those things would have to be taken into account. Absolutely.
Right. And then and CRA has, I'm pretty sure that they will have their hands full in change. There are certain the additional current tax rule, such as the home office use, right? So now more and more people are working from home. So the definition in the Tax Act of home office, where you meet the client and all the other stuff, the employer are allowing the staff to work from, there is an option. So what does that happen? Does CRA go and revisit that definition and then allow, or the employers are going to give the employees T2200, where they can claim certain portion of the home expenses? Like these are the things which go with the new new regime of COVID-19. And
Right.
Even after COVID-19, I think that what Suraj and I and even our office, and I have read surveys, a majority of people are saying we like we like this flexibility of working from home, and then for one, and I don't even know that how much of the things will go back to the way they were prior to COVID-19, and that will give rise to a lot of other things to be considered, whether at the government level or the employer level or at the employee level, right? So,
Yep.
and
Go ahead, Bruce.
Question came up. I want to ask both of you, because you talked about it earlier, Nadeem. Like when you do audit insurance, you can't do the old traditional inventory and all these old traditional things and technologies and risks with cybersecurity. So what happens to this CA profession? I guess I'm a CA too, right? Are we opening ourselves up to this risk, this whole new level of what are we in for? It's a
Very
low
good.
question,
Yeah.
but what are we in
Very
for?
good question. Very good question, Bruce, because like I said earlier, that for a manufacturing company, the inventory would be a significant
Yep.
amount on the balance sheet item. And for an auditor to be able to give a clean opinion, we need to be able to assess the valuation and existence and measurement. And then before even we get to the measurement and valuation, we have to, the existent, it starts with an existent on a particular date, which is a year-end date. I guess that if the circumstances where the offices and head offices were shut down quickly, and then there were no recourse for an auditor or the business to arrange such a thing. The CPA Ontario has given a certain guidelines where a qualification can be inserted in your opinion, in your audit report, only for the quantities of the inventory, because don't forget that the gap does not relieve us to perform the alternative procedures. So we will still perform the alternative procedures, something like the valuation. You can look at the purchases prior to the year end or around the year end, right? So to see that inventory was purchased and valued what it is. So that could be one of the audit procedures came to my mind. But to give an opinion about the quantities they existed, which you haven't, so you can qualify on that basis, and you specify that you were unable to, and then the effect is pervasive. It could be anything else, and then to lead to that. Now we have to come up with the going forward to your question as a CPA, what we're going to have to do. We have to start using the technology. We have to come out of that comfort zone that no, arrange, I will be there at 9 o'clock and how many people will be there to stuff. No,
Does that technology exist today that we can use?
Oh yeah, definitely. Like look, screen sharing, video conferencing. It's just like, last night I was thinking another thing, that what institute tried to do for last 3-4 years to force this auditor to think, right? So they came up with the risk-based audit approach. Think, find out the risk, identify how you're going to just mitigate those risks. We were certain people, they were still reluctant. Oh, come on, like this risk-based approach, how do I think about it? And if you look at the CPA inspection report, the more deficiencies were in planning, right? And that's where you identify the risk. So what the profession couldn't do in 4 years, I think that COVID-19 did it in 4 months, because that just forced you and pushed you.
Oh, yeah. I mean, Nadeem, just speaking about.
That's it. You have no choice.
Yeah. I mean, just speaking about our office, Nadeem, I know there are like our fellow partners in the office, some of them never thought in the world that we can work outside of the office, and now some of them are loving it. They're like, you know what, I don't need to be in the office 5 days a week. I can work from home 3 days a week and come in for 2 days a week, or whatever the case is. So we're seeing the positives as well as what is usually encountered with change. Change is always hard, but go through the change, and I think you're going to see that there is a very positive outcome at the end of the tunnel, for sure.
There is, yeah, there is.
Yeah, so Bruce, your point of the technology existed, yes, it does exist. Like could we have thought about it, that the people sitting at different places, 28 people we're seeing each other, talking to each other.
Yeah.
That Zoom meetings came in, virtual meetings came in.
Right.
And now file review, significant part of my portfolio is the assurance, like audit. I went through the busy season, like file reviewing it. The staff was able to share their screen. I was looking at it. We were both logged into the server, and we were able to just go through the file review as if we were sitting in the boardroom or in an office. Now, going to the more difficult areas like performing the audit procedure, such as the inventory counts. So again, we had, like I said, the COVID-19 pushed us to think about it. How can I do it now? Okay, so I have the cell phone or the staff somewhere, the client's office is closed, but they will have the iPad or cell phone. I could either have a Zoom meeting. The person could start, like, how do I know where the warehouse is? So I'll say, start from outside of the building, because surely I know the address and I know the building. I have been there if it's an existing client. So I know the person is at the right place. Then I'll say, okay, now enter. Show me that everything is neat and tidy. That's one of the audit procedures we perform. Inventory is laid out neat and tidy. And I can just do the audit procedure. Okay, open this box or something else. So the count can be done, but one has to be willing and to be thinking out of the box to apply all these things. And then hopefully we'll all get used to, one day we'll be like, hey, what are you talking about? That's just like back of my hand. There's nothing to think about it, right?
Yeah. A question came up, a tax related question. Would you consider independent contractor classification and personal service businesses will be revisited and could lead to differences provincially as well? Suraj, like, I guess the whole point is regarding the whole tax thing, right?
Right. I mean, speaking high level to that, obviously there's always been, what is considered to be an independent contractor and what is considered to be, an employee of a company. And there's obviously different, consequences depending on the route that classification that's chosen, or whether it's been imposed on you by, the CRA or whatnot. Now, we're moving towards more of a, work from home mentality. A lot of companies that have already been on the forefront of having their employees work remotely, work from home, have already started to do this. And a good example is Uber, right? Uber's a good example of this, right? They don't have any employees according to Uber. All their workers are independent contractors. They own their own tools and resources to be able to deliver the service. Uber is taking a position that they're just arranging for the service, and therefore they're the middle guy, and therefore they don't have these employees. I know there's a recent case that they've kind of opened the door on that in Ontario, but this is the gig economy, right? Because of the gig economy, a lot of the models around the gig economy are independent contractors working from home or working from a remote location. So I think this is going to be visited more so going forward. And you're going to see cases like the Uber case in Ontario, in Canada, and even Uber cases around the world, I think lead the charge into determining whether you have new rules to look at, whether they're going to be considered independent contractors or they're going to be considered employees of a company.
Right? Or maybe even a new classification.
Perhaps, but I think a lot of the rules that are going to be fell back on when it comes to this determination is a lot of prior court cases, right? There's been a lot of court cases on independent contractor versus an employee consideration. So there's a lot of good material, good facts, good relevant guidelines that need to be followed. Is there going to be something new because of the age that we live in now and the technology that's available to us? I'm sure there's going to be that consideration tacked on. Yeah, I think it's going to be revisited. I think it's being revisited right now in the form of the Uber case, because that's the classic scenario where you have technology and people that are willing to go out and do something for a company. The question is are they going to be an employee or an independent contractor for that company? And that's going to be decided in the next little while for sure.
Yeah. Well, we're going to come to an end very shortly of this webinar. And before we close, please, any last minute questions, please send them through. But I also want to just thank both of you. If there's businesses and companies online and need advice, where do they get hold of you guys? Nadeem and Suraj, where should people contact you if they need help? Look, could be on the phone here, there could be businesses that are asking. I saw some of the questions that some of them actually, one of them particularly needed some help. So where's the best way to connect with either of you or both of you?
Well, the best place for us to reach out is that you can find us through our website, and Suraj and I, we are working. Suraj is also looking at all the tax part, which is like he, in the beginning he said that all the government reliefs are coming up, and I am looking at any assurance side of issues. So yes, send us an email, find us through our website. We have all the contact details, either the email or the phone number, direct line. Send us a note, and we'll be more than happy to assist you, whether you are an entrepreneur who needs to have a guidance for your internal audit thing, or if you're a colleague professional, you'll always happy to connect with other people, with different people, and then help you out.
Remember that Schwartz Levitsky Feldman LLP, right? Okay,
Right.
wonderful.
Correct.
And I want to thank everybody. Thank you so much. Yeah, SLF, I just see .ca. Thank you, everybody, for today, for attending. Thank you, Nadeem. Thank you, Suraj. Thank you for people putting our videos on and making it colorful. That was great. And thank you to Mark and our marketing person, Christina, for organizing all this. And we're coming to an end. And just one thing, look out. Just one thing I'm going to say. We're doing CFO services. My company, CFO Services, provides chief financial officers on a contract basis, a part-time basis. And that's what we do. And we're having a few more webinars coming up that are pretty interesting. So keep abreast for you people, and also feel free to subscribe. There's a whole slew coming up that it's go, go, go. Okay. So
Thank you, Bruce. Thank you very much. Thank you, everybody, for joining us. It was a pleasure to talk to you guys.
Thank you. Have a great day, everybody.
All right. Have a great day, everyone. Thanks.
Bye-bye.
Bye.
Bye-bye.